Hello, I'm Sandy Franks, and this is Smart Investing Stockbusters on TaipanFinancialNews.com. My special guest today is Kristen DeHamer. Chris is part of the team that put together one of the best shorting services ever developed, Death Cross Trader, which combines the ancient art of candlestick charting with the pragmatic knowledge of Wall Street rumblings to beat the professional tipsters at their own game. Welcome, Chris.
Thanks, Sandy.
Chris, you and your cohort, Ian Cooper, have built an impressive track record over the past few months, including 19 winners in a row and 1,819% cumulative returns by simply buying put options on the subprime lenders before they made national news. Now I hear you're making a killing in another stock, First Solar.
That's right, Sandy. My team recommended readers buy the July 65 puts on First Solar when it was trading at $66.50. First Solar is down more than $10 in less than a week, and our Death Cross traders are sitting on an 89% plus gain.
Okay, that's a really nice trade, Chris, but how do I know it wasn't just dumb luck? In other words, is your system repeatable? Can you repeat that success?
Look, I'm not a witch doctor. I don't stare at the entrails of goats or pick stock prices using the lunar eclipse. It's all about common sense and the ability to put your knowledge to use. I'll give you 3 precise reasons why First Solar was going to go down and how we knew about it first. Reason number 1, First Solar is a recent IPO. Recent IPOs unlock shares 6 months after going public. In this case, they are unlocking or selling on the open market 20 million shares starting on May 16th, 2007. This will add a third to the float.
Okay, before we get any further, tell our viewers what an unlock is and why is it done in the first place?
Okay, that's simple. The company that took First Solar public, in this case Credit Suisse, wants the IPO to be a success. They want everybody involved, all the insiders, to make money. So they hold some shares back to ensure a tight demand. That means the float, the number of stocks out there, is small. Tight demand. So tight supply increases, makes the demand drive the stock up. 6 months later, the company insiders are allowed to sell. These are SEC rules. And so the company insiders can sell. They've been waiting years for this big payoff. And so they're going to sell their 20 million shares, most of them at once.
Okay, that makes sense. You mentioned that you had 3 reasons. Tell us the other ones.
Well, reason number 2, First Solar is a market darling. Solar power is all the rage. Gas is at $3. Oil's up to 65. All this hype has pushed the price to earnings ratio up to a staggering 882. That's the highest valuation of any stock on Wall Street. Number 3, there were technical reasons why this First Solar was going to drop. The chart formed a double top with a nice doji at the peak. This is a clear sign the stock is heading lower, especially when combined with the first 2 items, the unlock and the high valuation. And we timed it perfectly. The stock dropped $10 in about 3 days. I believe it's heading into the low 30s, but I doubt if we'll ride it all the way down. You have to be conservative in these trades. We're up, once you hit your triple digits, that's good enough for me.
Well, but Chris, if you can't ride it all the way down, then it sounds like viewers watching can't really do anything with this information. So are there any other things that you would recommend that investors stay away from?
Well, sure, Sandy. I got a lot of stocks you want to stay away from. Even though the Dow's hitting new highs, there's some overvalued plays out there. One is Amazon, second is WebMD, and the third is General Growth Properties. All have triple-digit PE ratios. All are market darlings. And the case of GGP, I don't know why anyone's holding an overpriced REIT in this market. Amazon has a history of hit or miss in their quarterly earnings. The last post-Christmas earnings, the first quarter, Amazon hit big, drove the stock up $20. Second quarter is historically bad for Amazon. This stock is overpriced at these levels.
But wait a minute, Chris. I just read an article about how Amazon has spent $500 million buying back its own shares, actually $14 million to be exact. Now, these shares are worth $868 million. So they spent $500 to buy them. Now they're worth $868 million. Wouldn't it be worth it to own Amazon for this reason alone?
Well, Sandy, you're talking about valuation here. So, I mean, Amazon has a market cap of $25 billion. So, the $285 million they made from buying their own shares, first of all, it's priced in. And second of all, it doesn't cover the fact that their share price was just up $20. That added, $10 billion to the price of the stock. I mean, it's overvalued at this point.
Okay. Now, you mentioned General Growth Properties is another stock buster. Who are they?
Well, General Growth Properties owns like Rouse Corporation. They're a big REIT. They own a lot of malls. They have a high PE ratio of like 240. The stock just the chart looks horrible. I put out a put on them today. As a matter of fact, my aggressor service. There's a nice doji at the top, and money flow is turned negative. They trade below their moving average. I just think it's going down far.
Okay, and the other one you talked about is WebMD, and I'm assuming that's the website that almost everyone's familiar with, right?
Yes, Sandy. WebMD is a web portal for medical advice. It has a PE of 640. It just formed a double top. In fact, it's down $7 today. I wish I shorted it yesterday. But, doesn't everybody remember Dr. Coop or MotherNature.com? It wasn't that long ago.
So, Chris, are you suggesting that this online website will fall by the wayside? I mean, just looking at the website statistics on Alexa.com, WebMD is a top 10,000 ranked website. How can you suggest it's not a viable business?
Well, I'm not suggesting it's not a viable business. I don't know if it'll be here 5 years from now. I don't really care. What I do know is right now it's overpriced. They have something like a 640 PE. They're not making money. They're talking about making money next quarter. As soon as these companies go from the hype phase to the actual making money, so you can start analyzing them, they tend to fall back to the mean.
Okay, so where do you see the price falling to? Where's the share price going to go to?
Well, I think it could drop as low as $35.
All right, let me summarize because we're running short here on time. You say for viewers to drop Amazon and General Growth Properties, also WebMD.
That is correct. Not only drop them, but short them.
Okay, well, thanks for sharing the information with us, Chris. We certainly look forward to having you back on Stockbusters.
Thank you, Sandy.
If you'd like more information on Death Cross Trader, you'll find it available at TaipanFinancialNews.com. Thank you for watching Stockbusters. I'm Sandy Franks. I'll see you next week. Until then, keep your portfolio safe.